You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. I got the chat open. Good morning everybody. I love when people come in and say good morning, good morning, good morning. So I've done nothing but trade my entire career. Moved out to Chicago right when I graduated college because I knew that I wanted to be on the trading floors. I just have always loved numbers. I've always loved making odds and statistics. So I always knew that I wanted to trade on the floor. So I moved out to Chicago. I was on the Chicago Mercantile Exchange. I worked on the Chicago Board of Trade. And where I really learned options and how to value options to the penny is when I got down and worked at the Chicago Board Options Exchange. Now I get on here every day the market's open, and I just try to add as much value as I possibly can. Once in a while, we'll even share our free trade of the day. And that's what we're going to go over today because I shared a trade with you guys last month. I shared a trade with everybody. I absolutely loved and still do love this trade. So I shared a document with you guys last month. I'm going to go over that with you guys. I'll answer any questions you guys have. Let's have some fun. Excited about this one, guys. Okay. So let's talk. I put this out and I shared this with everybody. And here it is. It was QXO. Okay? The QXO trade story. We put this on our website. I did this a month ago. Okay? QXO. We shared this with everybody. The reason why we liked QXO so much, a bunch of reasons. For one, Kushner's Affinity Partners put in $150 million, and it was also created by Brad Jacobs. Brad Jacobs is a successful entrepreneur that's done United Way Systems, he's done URI, he's done Expo that we've been involved in, and then late in 2024, he launched QXO with big Jared Kushner backings with the objective to change the building industry. Well, so far so good, because since we shared this trade, let me pull up a chart, because since we shared this trade, it has gone one way. Let me show you that. Down here is the original trade we shared with everybody in our free community. We also have this in our paid community as well. But if we look at QXO, ignore all that stuff before. Get rid of these lines so you guys can see what's going on. QXO, we got in, 519. Already started moving a little bit. 519 right here. Boom. And then today it's trading 23.50. So QXO, it is a phenomenal trade. But there's a reason of exactly why we did this trade. So I think you'll find that the trades that we share at Masters in Trading, there's a reason for every trade that we do. Using technical analysis alone is not enough. Technical analysis alone will get you into a lot of trouble. So instead of that, we do research. We want to follow the big money. So we want to follow unusual option activity, or we want to follow insiders making a big play for a stock. So I shared QXO 1686. I know many of you guys have gotten involved in this. What we also did was shared public company acquisition targets. And we shared 4 different names: BXC, GMS, Site, BLDR. Well, one of those names today is there's a bidding war between QXO and between a small company called Home Depot. Here's what GMS looks like. GMS, if we go back to the document when it was shared, 76, last trade 104. So we have that full document. It is on our website. We shared it with everybody. This was a free trade for everybody. Can I get a show of hands? How about a Y? Who was able to get in QXO? QXO. Show of hands, please, because I want to celebrate with lots and lots of glockenspiels. We like to celebrate with glockenspiels when we have winning trades around here, but really awesome. Yes, 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 yes. You guys are awesome. Wow. In. By the way, we shared this as a free trade. We also shared this in our community with some more advanced trades. Here's a trade that we did using calls and a bull spread up 300%. So Snowman, this shows I'm over leveraged, partly due to the conviction of QXO, but his whole account is up 45%. Not just the trade, guys. The entire account is up 45%. Rick here, up 245%. Brian, quite the ride you found. Lily, discipline, waiting for the pullback. Another awesome thing about having a community is you can be disciplined. Wait for pullbacks. Don't chase. My fear of missing out is cured. Kevin, QXO, 150% gain. Guys, I am so happy for you. I am proud of you. Great job. I see sharing in our Discord as I write. Rick here, in at $1.15, out at $6.10. That is a beautiful, beautiful way to end the week. So really just awesome, guys. Very, very cool. And again, not only did we choose QXO, we also spoon-fed you guys the acquisition targets on a silver platter. So really, thank you, Richard. This was an unbelievable trade, guys. I have to say, this has got to be the trade of the year thus far. We have covered 1/3 of our position. We are still very long QXO in our all access portfolio. So, wow, really, really great trade. Oh, James, I got to share with James. James takes out about $60,000 on QXO, but he's also going to hold on to the trade. So this was really, guys, just a special trade. Right now, we are doing the masterthetrading.com/challenge 2025. The goal of the challenge, I've been trading for 27 years. I believe with my heart that I could teach anybody how to trade options safely and correctly. Just give me 7 days. This challenge is exactly that. It's a 7-day course that I believe I could take anybody with zero options experience to being very comfortable trading options. So if you're not involved yet, guys, head over to Challenge 2025. I think you guys will really enjoy this. Next topic. This is my favorite quote. Let me tell you what this quote means to me. And it's, luck is the residue of opportunity and design. I've seen this quote as well saying luck is the residue of design. What this means to me is when Michael Jordan hits 10 shots in a row, and I was actually a New York Knicks fan growing up, but I live in Chicago, but I'm going to use a Michael Jordan reference. If Michael Jordan hits 10 shots in a row from the field, and he normally shoots 45%, his 11th shot after making 10 in a row, is his odds still 45%? Yes. But that dude's in fuego. And we've seen MJ when he gets really hot, and it seems like he's throwing that ball into a swimming pool. So luck is the residue of design. By putting yourself in position, by practicing, by working hard, by learning, you're putting yourselves in position to get lucky more often than not. So the next trade that I'm going to show you, we got lucky. But luck is the residue of design. Those who practice more get luckier. Michael Jordan gets luckier on his 11th shot after making 10 in a row because he catches fire. So I love this quote. This next position was lucky, but luck is the residue of design. Here it is, guys. Base. We had an earnings trade in base. And when we trade earnings the exact same way. When we trade earnings, we're betting on a stock moving. We don't really care which way. Usually we're doing these with straddles and strangles, so we're playing for the thing to just move. Well, we have a trade in base, and base didn't move at all. It was just stuck in the mud, doing absolutely nothing. Our premium was just bleeding and bleeding and bleeding. But what we always say at Masters in Trading, we never sell options for a dime. You never sell options for a nickel. That's like picking up pennies to risk dollars. So one of the things that we do at Masters in Trading, if you get into a trade and you risk $500, you're in that trade until expiration or until you can take off a big fat profit. You can't risk $500 and then stop yourself out and only lose $5, right? You don't risk $500 and then bring in, just lose $5 on the trade. You're going to lose principal or you're going to make a whole bunch of money. So base was a loser, sitting the final day of expiration. But look what happened. On the final day of expiration, there's a bid to buy the company. So our options that were worthless, like literally 0.0, in one day, because we held on to the position, base jumps up 30% right here. Mike in at 90 cents, out at 440. Mark in at 90 cents, out at 440. 94, 440, 90, 450, 90, 450. So all of a sudden, by holding the trade, what we thought was absolutely just dead, no chance, but we're still going to hold it because we don't sell options for a nickel, right? We don't sell options for a nickel ever, ever, ever. We buy options for a nickel. We buy options for a dime, but we don't sell them. And the reason that we don't sell them is because once in a while, you're going to get lucky. And we go from being a 100% loser to a 200% winner because luck is the residue of design. These are lessons that you need to learn. You don't know not that you're supposed to hold your options until expiration. Many people will just get out of them and take whatever they can. So base, I am so happy that you guys trusted in the process. Here are the trades in the portfolio. Again, every single trade that we recommend, we legally have to do the trade as well because we are 5,000% transparent. So we got into the trade, 90 cents for the 20 calls, $1.20 for the 17.5 puts, a total of $210 of risk per strangle. We took that trade off this morning for $4.40 for a gain of 111%, which could have been absolute bupkis. Bravo, guys. Way to go. This is an important lesson, but this comes down to being confident. The community will tell you, don't get out of these trades for a nickel, okay? Really, really cool. I have another fun thing. Again, masterthantrading.com/challenge. I wanted to share this from J-Rog in our Discord. I know when there's a lot of print, it might be hard to follow, but we're going to try our best anyway because I was so happy with this comment. So here we go. I had an interesting trade last week. Back on June 4th, I entered a debit spread. So here's the trade. The blue and the red line follow the yellow line. Wherever that yellow line goes, the blue and the red are going to follow. So don't even worry about these things what they are. The yellow line is the alpha. Whatever the yellow line does, the blue and the red are going to follow. And the reason it does that is because that yellow line is called the crack spread. And we look at that using a tool called the crack tracker. So if those two lines just follow the yellow line, and that's the only thing that we need to know about it, what the trade was that J-Rog did is J-Rog was long the blue line. The blue line wasn't really behaving. It wasn't really making a strong move while the crack spread was strong. So he tried to be creative. And he knew he was losing money, but he said, hey, you know what? This PBR is really inexpensive relative to MPC, especially relative to the crack spread. So he made a trade. In addition, he bought PBR. He was short MPC and bought PBR because PBR was inexpensive. What ended up happening, and why this is such an important lesson, is by doing this trade, J-Rog took. I was happy that I was able to use lessons I've learned here and teachings to create a trade management plan to change a losing position into a trade that ended up slightly profitable. Takes a loser, makes it slightly profitable. The trade before that, base, that was a dead loser, no chance. That turned around and ended up making 100%, 200%. These are the lessons that we need to learn. And this is why we say education mitigates risk. All these lessons that you learn, that are part of your tool belt, that you add to your memory bank, they are all lessons that help reduce your risk over the long term. Education mitigates risk. One more announcement, guys. For anybody going through the challenge today, we have our first live class. It's an open live class for anybody going through the MIT challenge. We're going to get on there, answer any questions you have, and we might even share a trade or two. Guys, thanks for watching. Everybody in All Access, you guys sit tight. We'll be right back.